Hey, what's going on, everybody? It's your boy Sal here, freestockpicks.org. Please click subscribe right now on this video if you are not already a subscriber. Please click subscribe right now. My goal is 10,000 by the end of the year. I would really appreciate it if you would click subscribe so you can stay abreast of all my new material. All right, guys, so today I want to talk about descending triangles. All right, if you don't know what a descending triangle is, it's basically when two or more declining peaks end up forming a trend line that converges with a horizontal line as it descends. All right, so it's a bearish signal, and it's an opportunity to show you what would be a great entry point for a short. Now, descending triangles, they are basically over, a period of 30 days, 60, 100. I mean, practically, it can be for some large caps, it can be years, right? It can be spread over years. For this particular case, Angie's List, ANGI, I think Angie's List is a dead company. I think the whole idea behind Angie's List is a dead business. I think that we're moving into a period of time where people are not interested in paying for the ideas, or excuse me, for the opinions of others. I honestly don't think that people want to pay to hear other people's opinions. All right. So they're a business that honestly is getting hammered by what is a new generation of competition that has practically changed their business, from night and day, really. Okay. So you've got competition like Home Advisor, right? Home Advisor, which offers the exact thing that Angie's List does, but they changed their business by offering it for completely free. And the growth of Home Advisor has been so spectacular, it's basically forced Angie's List after 20 years to change the way they do business by offering now free memberships. Okay, so the opinions that they've had to, verify and to hold as what made them a quality site to go to, differentiate themselves with other providers, right? They're losing that. They're losing that edge now. They are losing that edge now. So that changes radically the business. So let's go and look at why I think this is a great short to begin with. Okay. Now recently, the company, let's start at the chart. The company came out with earnings, and the earnings was great news, but they played a little funny thing with the numbers there, and I'm going to show you guys that in a bit. So it broke out of the triangle, it went lower, earnings came back up, and guess what? It didn't pop out the triangle. It was perfect. It didn't pop out the triangle, so I know we're going lower, and I know we're going to crack support again because we were already losing value significantly in the stock. We were already losing value. So as you can see here, as I said, is multiple peaks, right, that form that triangle that hits a horizontal line. And that horizontal line is what we call support. And we've already cracked it one time. We came back, and that fourth one was the sign for me. And that's why I'm making this video, because we came back up and we had a lower high this time. And obviously we went back downward this Friday. This Friday was so important. And I didn't want to talk about it on the show yesterday because I still wanted to do this research to confirm it. But I've got, the confirmation. And I think if we look toward the week, I want to say maybe by Tuesday, maybe as soon as Monday, if we crack the support line here, we're going much, much lower. All right, so as we can see here, here are the peaks. One, and you always want to number your peaks. 1, 2, 3, 4. Right? So for me, and the way I trade, the fourth level confirmation for me is the most reliable and has been the most reliable for me when we talk about descending triangles. It might be different for you. I saw the number 3, but I knew earnings were coming out, so I wasn't sure how to play that. If it was disastrous, then sure, I would have jumped on the short. But earnings came out, and they played funny business with the math, and that even, again, just reiterates my point of view that Angie's List is a dying business, and we're going to the pennies for this stock. All right. So here's what the release, this recent earnings, and I'm going to go over some key metrics that they released and why this business isn't overall a business that's growing. In fact, it's actually declining. They're just playing some games right now with the numbers to make themselves look a little bit better. So as you can see, as I said earlier, They introduced free memberships this quarter, which is a very new thing for them. That's a radical change from their business. They added over 152,000 customers to their free memberships. And again, this is free. They're not making any money off these people, right? And when you're talking about free memberships, you're talking about, you still have to pay the expenses. You got to pay your employees. So you're not making any money on these people that are free, right? They're basically just using you, and you're not making any money off them. Total paid memberships, there was a decline in total paid memberships year on year from 2015 to 2016. Obviously, total membership growth, but that growth has a lot to do with the free memberships that got added in there. All right. So, as we can see here, significant decline in gross paid memberships added, almost 50% difference year on year. The average paid membership renewal rate is decreasing, right? So we lost almost 5% in terms of membership renewal rate. So people are finding it less valuable to renew with Angie's List, and that has a lot to do with the fact that you can get some of the same material on Home Advisor absolutely free of charge, or you can just become a free member and cancel your membership. There was a gain in participating service providers, but here's the thing that was really interesting. Total service provider contract value actually decreased. So ask yourself, how does participating service providers, so plumbers, AC heating guys, roofers, so they got more of those people to sign up to become providers on the website, but the value to Angie's List decreased. So what does that mean? That means Angie's List is offering discounts to providers to sign up. That's not a good thing. They're giving away their business at a cheaper price. That's not a good for long-term growth. All right. So as we can see, that's why total service provider contract value fell. All right. Total service contract provider fell nearly $8 million. Let's keep going. So as we can see here, net income, which is what made the stock do that nice little pop like that, right? Very nice gain here from 640 to a high of 840. Great bet if you took a bet on Angie's List. Huge return. That's amazing if you played Angie's List and won on that. But it's not going to last. And where did this earnings net income come from? I mean, it wasn't new memberships. It wasn't new contract levels. Where did they get an increase in net income? Here's how. They saved money by cutting back on marketing, which again is not a good thing. As you can see here, marketing played almost 33%, right, of spending went into marketing for 2015. As we can see here for 2016, first 3 months, it was a significant cutback. Almost 50% of marketing got cut back. And we can see it right here at top buying value. Marketing costs was cut in half. So that's where we get the significant savings from. We're spending more in product and technology because now we got to spend a lot more to get every single customer, but we're cutting back our marketing. All right, so they're playing games with the money here, and that's how they were able to show net income growth here. So we're not growing the business. We're not becoming more valuable to the marketplace. We're simply cutting back on how we promote, and that's dangerous, right? Because the idea is that marketing translates into customers. For Angie's List, it's not working either way. It's not working either way. So as we can see, we showed net income, but at the end of the day, they can't keep doing this. That's not going to continue to run. As you can see, we've got competition in Home Advisor, which again, is a free website, guys. So what's the value of Angie's List when your competitor is just as good, just as organized, if not more organized, and offers the same product you do absolutely free of charge? All right, so let's go back to our chart. As we can see here, we're at the 4th level of failure here. We've got these these lower highs each time in the triangle. And we want to confirm this because you're saying, oh, LaSalle, this is, this is spread over months, right? So this starts practically in February and August. Okay, let's go ahead and confirm it in some other timelines. All right, so let's look at a 1-month chart here. zoom out just a little bit, and again, we're confirming it. 1, lower high 2, lower high 3, lower high 4. So here's our resistance line at 780, basically 781 to 785. Be patient and wait till it gets to that point. If it breaks it, it's a short to the downside, and you got some money to be making here. All right. So our next, resistance level, 724 from 780. So that's a pretty good return on your money. All right. If it holds that to begin with. Because this is an intraday hold based on that earnings play. So it might not hold that at all. It might honestly go back all where it was pre-earnings at 634, which would be a great return on a short. So it's your boy Sal, freestockpicks.org. This is descending triangles. This is how I understand it. I hope you learned something today. Descending triangles, really, really great way to find excellent shorts. All right, so time will tell if I'm right about this. Angie's List now trading at $8.09. So time will tell if I'm right. Hopefully we break out the triangle. I'll hit my shorts, make some good money on this. Please click subscribe if you haven't already. Leave a comment. I appreciate it. Thanks a lot, guys. Take care.